Hey guys, welcome back to MotiWise. Today we'll talk about reasons why you should build credit. Let's head into it. Number 14. Low interest rates on credit cards and loans. The interest rate is one of the costs you pay for borrowing money, and often the interest rate you get is directly tied to your credit score. If you have a good credit score, you'll almost always qualify for the best interest rates, and you'll pay lower finance charges on credit card balances and loans. The less money you pay in interest, the faster you'll pay off the debt and the more money you have for other expenses. Number 13. Better chance for credit card and loan approval. Borrowers with poor credit history typically avoid applying for a new credit card or loan because they've been turned down previously. Having an excellent credit score doesn't guarantee approval because lenders still consider other factors such as your income and debt. However, a good credit score increases your chances of being approved for new credit. In other words, you can apply for a loan or credit card with confidence. Number 12. More negotiating power. A good credit score gives you leverage to negotiate a lower interest rate on a credit card or a new loan. If you need more bargaining power, you can take advantage of other attractive offers that you receive from other companies based on your credit score. However, if you have a low credit score, creditors are unlikely to budge on loan terms, and you won't have other credit offers or options. Number 11. Get approved for higher limits. Your borrowing capacity is based on your income and your credit score. One of the benefits of having a good credit score is that banks are willing to let you borrow more money because you've demonstrated that you pay back what you borrow on time. You may still get approved for some loans with a bad credit score, but the amount will be more limited. Number 10. Easier approval for rental houses and apartments. More landlords are using credit scores as part of their tenant screening process. A bad credit score, especially if it's caused by a previous eviction or outstanding rental balance, can severely damage your chances of getting into an apartment. A good credit score saves you the time and hassle of finding a new landlord that will approve renters with damaged credit. Number 9. Better car insurance rates. Add auto insurers to the list of companies that will use a bad credit score against you. Insurance companies use information from your credit report and insurance history to develop your insurance risk score. So they often penalize people who have low credit scores with higher insurance premiums. With a good credit score, you'll typically pay less for insurance than similar applicants with lower credit scores. Number 8. Get a cell phone or contract with no security deposit. Another drawback of having a bad credit score is our cell phone service providers may not give you a contract. Instead, you'll have to choose one of those pay-as-you-go plans that have more expensive phones. At the least, you may have to pay extra on your contract until you've established yourself with a provider. People with good credit avoid paying a security deposit and may receive a discounted purchase price on the latest phones by signing a contract. Number 7. Avoid security deposits on utilities. These deposits are sometimes $100 to $200 and a huge inconvenience when you're relocating. You may not be planning to move soon, but a natural disaster or an unforeseen circumstance could change your plans. A good credit score means you won't have to pay a security deposit when you establish utility service in your name or transfer service to another location. Number 6. Bragging rights. Because of all the benefits, a good credit score is something to be proud of, especially if you've had to work hard to take your credit score from bad to good. And if you've never had to experience a bad credit score, keep doing what it is to maintain your good score. It only takes a few missed payments to start getting off track. Number 5. Auto loans require good credit. Most people do not have the money to fund a vehicle and cover living expenses at the same time. Many will apply for an auto loan. Your credit rating affects whether you're qualified, the amount you can receive, and the interest rate of the loan. Generally, loan applicants with a higher credit rating can qualify for larger loan amounts with lower interest rates. A low credit rating will limit your choices. Few lenders will work with you if you have low credit. Those that do will charge a much higher interest rate on your auto loan. A higher interest rate will significantly raise the amount you pay monthly on the car, which raises the total amount you pay over time. Number 4. Credit checks for employment. Many employers conduct credit checks as part of the hiring process. If you haven't demonstrated financial responsibility, a prospective employer might be hesitant to hire you. For example, the employer might believe your level of debt is too high for the salary offered. Some employers also check credit reports before giving a promotion or raise, especially for financially related or executive positions. Number 3. Business loans require good credit. Many people have dreams of starting their own business. Most business startups require a sizable amount of cash you may not have available. In that case, you'll have to obtain a small business loan. Among other things, you need to have good credit to qualify for the business loan. Number 2. Living expenses can require good credit. It might be somewhat shocking to learn that your credit is needed to establish utility services. Electric companies contend that you're borrowing 1 month of electric service. Before turning on your electricity, the company will check to see if you've good credit. Most utility services conduct credit checks, including cable, telephone, water, even cell phone service providers. Number 1. You need good credit to live comfortably. Since your credit is defined by how you've paid your bills in the past, many businesses, landlords, mortgage lenders, utility providers, and even employers use your credit to predict your future financial responsibility. Anytime you need to borrow money, finance an essential item, or set up services, Your history of paying bills is called into question. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so you don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.